This week, Asian stock markets surged, delivering a much-needed boost to investors and analysts who had been bracing for continued volatility. The sharp turnaround marked a clear departure from the uncertainty that had dominated recent weeks, surprising many market watchers. Stock prices for major companies climbed steadily, boosting investor confidence and sparking a wave of enthusiastic buying across the region. The mood on trading floors from Hong Kong to Seoul was electric, with green numbers lighting up screens and signaling widespread gains for a variety of sectors. After weeks of worry and cautious trading, optimism returned in force, driven by a powerful rally in technology stocks and renewed faith in the market's resilience. The rally began in the United States, where strong earnings and positive economic data set the stage and quickly spread across Asia, creating a domino effect that few anticipated. Investors across Asia saw positive signals from America and jumped on the trend, fueling a region-wide surge that brought new energy to the markets. This upward movement, known as a rally, is especially significant for Asia's largest economies, which play a crucial role in global finance. The performance of these markets can influence global investor sentiment, impacting Europe and the Americas as well, and shaping the direction of international capital flows. The story is one of renewed hope, powered by surging tech stocks and growing expectations that central banks may soon lower borrowing costs to support further growth. We'll break down the key drivers behind this rally, from policy shifts to global economic signals, and what it could mean for the future of Asian markets. The scale of investor sentiment has tipped decisively upward this week, with many now looking ahead to see if the momentum can be sustained. Let's explore how technology, global trends, and policy expectations have combined to create this remarkable week for Asian stocks, and what lessons can be drawn for investors everywhere. The rally's ripple effect is being felt far beyond Asia, influencing markets and investor strategies around the world. It's a fascinating moment in global finance, and we'll unpack each piece of the story to understand what's driving this surge. The business world is watching closely as Asia leads the way in this new wave of market optimism, setting the tone for what could be a transformative period ahead.
Technology companies were the stars of this week's market rally. After a period of doubt and falling prices, investors returned to tech stocks, seeing them as bargains.
The fundamentals of these companies, innovation, strong products, and central roles in our lives, remained solid. The recent dip was seen as a buying opportunity, not a warning sign.
Tech-heavy markets outperformed, showing how crucial the sector is to overall market health. When tech giants rise, they often lift the entire market with them.
This rebound restored confidence and erased some recent losses. The tech sector's recovery signals renewed belief in a future driven by innovation.
Investors know that when technology thrives, the broader economy often follows.
This week's surge proves that faith in tech and its potential to shape the future remains strong. The rally in tech stocks was a turning point for Asian markets. The comeback highlights just how vital technology is to economic growth. The market's optimism is firmly rooted in the tech sector's resilience.
Hong Kong's Hang Seng Index jumped 1.2% in a single day, reflecting renewed investor enthusiasm and a surge of optimism across the city's financial sector. This sharp rise was one of the most significant moves seen in recent months, signaling a strong comeback for the region. The city's market, packed with tech and finance giants, benefited most from the tech rebound. Companies like Tencent and Alibaba saw their shares climb, helping to drive the overall market higher and restoring confidence among both local and international investors.
South Korea's KOSPI also surged, up 0.9%, thanks to global leaders like Samsung and SK Hynix. These tech powerhouses played a crucial role in lifting the index, as demand for semiconductors and electronics rebounded worldwide. These companies' gains signaled a real, powerful tech recovery. The momentum in the sector is now being closely watched by analysts, who see it as a bellwether for the broader Asian economy.
Both markets had been hit hard during the downturn, but bounced back strongly as tech stocks rallied. The speed and scale of the recovery surprised many, highlighting the resilience of these economies. Their performance set a positive tone for the entire region, encouraging other Asian markets to follow suit and boosting overall investor morale.
Investors are now more willing to take risks, especially in high-growth sectors like technology. The renewed appetite for innovation and growth is driving more capital into these markets.
The success of Hong Kong and South Korea is a key chapter in this week's market rally, showing how quickly sentiment can shift when fundamentals are strong. Their tech-heavy markets led the way, showing that strong fundamentals and innovation can drive rapid recovery. This leadership is inspiring confidence throughout Asia. The appetite for risk is back, and optimism is spreading. Investors are looking for new opportunities, and the momentum is building. These gains are a clear signal to the world that Asia's tech sector is back in force, and that the region is ready to lead the next phase of global growth. The rally in these markets is fueling broader regional confidence, setting the stage for continued growth and innovation across Asia. Mainland China's markets also surged, with the CSI 300 rising 1.4% on strong tech and chip stock gains.
Chinese tech firms, after a tough period, are seeing renewed investor interest. Alibaba's shares jumped nearly 3% ahead of its earnings report, boosted by excitement over its new AI app, Qwen. The app's rapid adoption, over 10 million downloads in a week, shows huge public interest in Chinese AI. Alibaba's rebound signals both strong consumer confidence and the company's progress in artificial intelligence. The success of Qwen positions Alibaba for future growth in a competitive field.
The resurgence of Chinese tech giants is central to the Asian rally. As the world's second-largest economy, China's market performance has global impact.
Strong gains suggest investors are looking past recent challenges and focusing on long-term growth. The positive momentum in China is spreading across the region. Chinese innovation is once again in the spotlight.
A major driver of the tech rally is renewed excitement around artificial intelligence, or AI. This technology is rapidly evolving, capturing the imagination of investors, businesses, and everyday people alike. The possibilities seem endless, and the pace of innovation is only accelerating. AI powers everything from self-driving cars to advanced medical tools. It's transforming industries, making processes smarter, faster, and more efficient. From healthcare to transportation, AI is at the heart of groundbreaking changes that are reshaping our world. After a brief period of skepticism, optimism returned this week, fueled by big news from the US investors, and analysts are now watching every development closely, eager to see which companies will lead the next wave of AI breakthroughs. Google unveiled a powerful new AI model and announced plans to design its own AI chips. This move signals a major commitment to pushing the boundaries of what AI can achieve, and it's setting the stage for even fiercer competition in the tech world.
This signaled continued heavy investment in AI, boosting confidence in the sector. Companies and investors are pouring resources into research, development, and infrastructure to stay ahead in the race. Asian companies, key players in the AI supply chain, saw their stocks surge as demand for chips and hardware is set to grow. These firms are essential to building the backbone of tomorrow's AI-powered technologies.
Google's announcements mean more business for Asian tech firms, especially in South Korea and Taiwan. These countries are home to some of the world's most advanced chip makers and technology innovators, making them crucial partners in the AI revolution.
The AI boom isn't just about hardware. Asian software companies like Alibaba are making major strides too. They're developing new applications and platforms that are changing how people live, work, and connect.
The global AI revolution is creating new opportunities and fueling economic growth. Startups and established firms alike are racing to innovate, and the competition is driving rapid progress. Investors are betting big on AI's transformative potential. They see AI as a force that will redefine industries, create new markets, and unlock unprecedented value in the years ahead.
This renewed belief in AI is a key reason for the tech sector's strong performance. The excitement is palpable, and it's driving both innovation and investment at a remarkable pace. The market's focus is firmly on an AI-powered future, with companies and investors alike eager to see just how far this technology can take us.
While most Asian markets rallied, Japan's gains were modest. The Nikkei 225 rose just 0.6%, and the Topix was nearly flat.
Caution in Tokyo stemmed from concerns about government spending and rising national debt. Higher interest rates on government bonds made borrowing more expensive, dampening investor enthusiasm.
A diplomatic dispute with China also hurt Japan's travel industry, leading to canceled trips and falling airline stocks. These local challenges held Japan back from joining the broader rally.
Japan's experience shows how local factors can override regional trends. This week, Japan watched the party from the sidelines.
Not all Asian markets shared in the tech-driven surge. Australia's ASX 200 slipped, reflecting its focus on mining and banking rather than technology.
Singapore's Straits Times Index also declined, as its market is dominated by banks and shipping firms.
India's Nifty 50 futures pointed to a flat start after a previous drop. Each market has its own drivers: commodities, property, or domestic policy. So the tech rally didn't lift all boats equally.
This diversity highlights Asia's complexity as a region of many distinct economies.
Local economic conditions and market structures shape each country's response to global trends. The tech wave was powerful, but its impact varied widely. Asia's markets are a tapestry of unique stories.
The surge in Asian stocks was sparked by strong gains on Wall Street. The U.S. market's tech rally set a positive tone for Asia, giving investors confidence to buy.
This global pattern is common. When America's markets rise, optimism spreads worldwide.
Hopes for a U.S. interest rate cut added fuel to the rally. The Federal Reserve is expected to lower rates soon, making borrowing cheaper and boosting economic activity.
Lower rates encourage risk-taking, especially in growth sectors like technology. The combination of Wall Street's rally and rate cut hopes created ideal conditions for Asia's surge.
The financial link between the U.S. and Asia is stronger than ever. This week proved how quickly global sentiment can shift.
In summary, Asian stocks soared this week thanks to a powerful tech rebound and renewed optimism. The rally was driven by bargain hunting, AI excitement, and strong signals from the U.S.
Tech-heavy markets like Hong Kong and South Korea led the way, while local factors shaped results elsewhere.
Wall Street's gains and hopes for lower interest rates provided the perfect backdrop.
Not all markets moved in sync, but the overall trend was clear. Confidence is back.
This week's surge shows how interconnected global markets are. A shift in sentiment can quickly turn doubt into a rally. The world is watching as Asia's markets lead the charge into a new era of growth.